Hello, welcome to the Credit Suite live stream. Today we are going to be talking about protecting your cash by using business credit. I'm Keith Knapp. Obviously, I'm not Ty Crandall. He is out for the day working on some really cool things. I run our social media teams, so if you come in and you see us, give me a hi. Let me know where you're from. Would love to hear from you guys and see how things are going. At any time, if you have questions, you can always feel free to drop them in the chat. Our team's there to answer your questions, make sure that that you're taken care of and you have everything you need. So we're just going to jump right in here. Before we get started, one thing that we do have running, which is actually a really cool tool, we've got our free business credit toolbox. And if you're enjoying this, if you love our live streams, if you see some stuff that you'd like to engage with, um, all you have to do is go to creditsuite.com/toolbox. Share this live, use hashtag business credit toolbox, and then you'll get a message on Facebook Messenger or Instagram to let you know how to access that. So again, that's creditsuite.com/toolbox if you'd like to take advantage of that. So let's talk about protecting your cash. Now, the first thing to know is, and we've all heard this adage 100 times before, and we're going to hear it 100 times extra. Hi, Tanya. Thanks for coming in from Minnesota. I'm going to mess up these names, guys. I'm terrible with names, which is why I like social media, because I get to see your pictures all the time. But welcome, guys. So let's talk about cash is king, because one of the things that we find that I see a lot with people that are jumping in, they're building business credit. There's always this end goal of the big loans, and you've got all these big ambitions, but a lot of times you're not leveraging your credit the maximum that you can be, and doing some really cool things that's going to help you to protect your business, one, but also to help you grow your business. So the point of this training today is we want to help you to look at credit a little bit different. We want to help you to understand how to leverage your business credit to protect your cash flow, so that you can grow it and you can use it more. So we all know the old song and dance: cash is king. He who has the cash controls the world. It's important for any business to have cash on hand. I'm a big fan. Ty has talked about this book before, and I'm a huge fan of it. It's called Profit First by Mike. I don't even know how to pronounce his last name. It's like Malkowski. But one of the things that they talk about is they set up this intricate system of being able to manage your cash. And as you're getting into business accounting, you're starting to look at financials. One thing that you're always going to want to have is 3 to 6 months of cash reserves. And that cash reserves it's basically like your savings account for your business. You want to make sure you've got that money there. If something happens, something goes wrong, you're not just sitting there with no money on hand. You've got backup. You've got things. You've got some reserves to be able to make sure you have what you need for it. So keeping a reasonable amount of cash on hand, working to do this, and it's going to allow you. It's going to save you just a ton of headaches as business goes on. Because if you've been in business more than, I would even say, 3 months, there's always going to be something that goes wrong. Something's going to break. Something's not going to work right. You're going to need cash. You're going to have things come up. You're going to have emergencies, basically, that are going to come up that you're going to need to cover. So and at the end of the day, while you're in here building your business, it's good to keep in mind that there are some things that are always going to require cash. As much as you want to run your business off credit, as much as you want to do it without a personal guarantee, there are always going to be some expenses like payroll. They're not going to let you put payroll on a credit card. Renting, some places will let you put it on a credit card and pay it off, but most of the time it's more of a cash expense. Insurance is a cash expense. So while you're running your business, there are some things that you're gonna need your cash for. And cash lets you take advantage of investment opportunities. Having your money aside, having your cash protected, stockpiling as much of it as you can, gives you an opportunity that, as things change, as business goes on, as time goes on and opportunities come up, you're going to be positioned in a way to be able to take advantage of that. And proper cash flow management opens up all sorts of opportunities. Because, I mean, let's face it, as an entrepreneur, if we look at our accounts and we see $20,000 sitting there free and clear that was not being used, it changes our mindset opposed to looking at it going, where am I going to come up with payroll for the next month? It changes your whole mentality on how you operate, what you're doing, how you pursue things. So let's talk about how business credit can help. And I broke this down into four different areas that we're gonna dive down into. So number four on this is you can create time to stack cash. Um, I love the concept of creating time because it's the one thing that we all need is we need more time. Number three, business credit is going to help you protect your cash flow. Number two, it's going to help you to mitigate rising costs. And number one, it's going to give you the opportunity to invest in high return activities. So let's jump into this a little bit more. So let's talk about creating time to stack cash. Sales, when you're running a business, no matter what you're selling, whether it's a product, a service, a good, a sale does not immediately equal cash. I mean, sometimes you have somebody walk up and hand cash, but most of the time it's going through your merchant account, or you've got agreements set up where you've got benchmarks that you have to be able to be able to hit to be able to get payouts, or it's just a process of going through the merchant account, hitting the bank account, just going through that process. But sales don't automatically convert into cash. Business credit can help you finance the goods and services that you need to complete a job, to get the service done, to be able to put yourself in a position that you can go to your clients, you can earn the money that you're charging them for, and then get the job done. And you can also use credit to keep the business moving while you're fulfilling the services. So we've got a couple of examples here that we'll jump into. So one of them that I like to look at is a roofing contractor. With it being springtime, we're always I'm in the Midwest. I'm in the Kansas City area. So right now it's like tornado season, and like every day there's just something that's getting ready to blow over, or some sort of storm coming in from somewhere. So roofing is kind of big in our area right now. But as an example of creating time to stack cash, let's show you an example of what a roofing contractor can do. So let's say you get the order, you talk to somebody, they're like, great, sounds good. You're running their insurance, you're getting everything in order. While all that stuff is working, while you're working on getting the money from the insurance company, moving through this process, with business credit, you're going to be able to get all the supplies and the materials you need to be able to start the job. So roofing materials, all of that. You can show up to the job with a fuel card funded by the company without a personal guarantee. Any tools that you need to get the job done. If something breaks, you have a hammer, you got a nail gun that goes bad, anything like that, you can actually use your business credit with Home Depot or different places like that to get that. And one of the aspects most people don't know, you can rent equipment through like United Rental and several other places with business credit without a personal guarantee as well. So basically, anything that you need to get the job done before you get paid, you can put it on business credit. You can have it all done. You can get your clients taken care of, then collect the money from the insurance company, or however you're going to work that out. But you see, using business credit like this, instead of having to wait for the money to come in, it gives you that ability to go out there, get the job done, make sure your clients are taken care of, your customers are taken care of, and then get the money for it. And you can keep a steady movement. You can keep things going, keep things operating, and really just streamline the operations of what you're doing. And best of all, it's on business credit. So all of that happens without a personal guarantee, meaning there's no credit check. You don't have to worry about your personal credit scores. If something happens with the business, you're taken care of. The liability is not falling back on your shoulders. Um, so that's again creating time, buying time with your credit. Let's look at number three. The third way you can leverage business credit for protecting your cash flow is just that, protecting your cash flow. And this can take a lot of different forms, but let's face it, the last thing that any of us want is to use our debit card and then find out somebody is going to come behind you and then try to rack up that credit card or your debit card, taking your cash money out, using that and taking thousands of dollars out of your business account. Business credit protects you with your online purchases. It has buyer protection. If something happens, again, you can challenge it. It's not actually coming out of the business account, so it's not your money that they're taking. It's coming out of the vendor accounts. It's giving you that layer of protection. And the other thing, and I hate I have this game that I like to play with my businesses, is I like to see how much I can not use money from the actual business account. Because if you go at the end of the month and you're sitting down with your bookkeeper and you've got to start reconciling all your expenses, I mean, it's you can have so much money running through a checking account that it's just like mind blowing. You don't even know where to go. It's just like hundreds and hundreds of transactions going through all the time, because when you're running a business, there's always needs. There's always things that you're going to buy. Using your business credit gives you the ability to isolate your cash reserves, meaning that every time you need to purchase, you're not having to use your debit card. You're not having to go through and pull money out of your checking account. You can put it on credit, and making it so that you're protecting that pile of cash that you have, that you can pay it off at the right time for you in the optimal time. And it just makes accounting so much easier, because now, instead of having to go through and look through your entire banking account going, oh, here's 57 transactions with buying paper. Now you can look at it and go, here's my Quill account. All of my papers ran on Quill, and now you have records of everything that you're using there. And next, you can stretch out your payments when absolutely necessary. If you get into a bind, if inflation really starts to dig in and starts to have an impact on how you're operating, having that ability to revolve payments, having a 60, 90, even a 30-day window sometimes gives you a lot more opportunity to go out there, earn what you need to earn, get your returns, and then pay off your credit lines and protect your cash flow. So, some of the ways that we like to look at this, or that we like to imagine this, is using your business credit to build a cash pool. And your reserves, your cash pools, all different kind of ways of looking at this. And using business credit will protect your cash. Your cash pool is going to include, like, how much cash do you have on hand? How much money do you have available? How much cash do you have available to spend on your vendor and credit accounts? And then how much cash is available to spend on your business credit cards? So basically, what you're doing is you're running everything into your cash pool. You're putting all your expenses on your credit. You've got your cash. Your cash comes in and pays off your credit, and it creates a symbiotic relationship that creates a separation between your cash and your expenses, and giving you more room, more flexibility, more ability to be able to manage your business finances the way you want to. The number two reason that you want to protect your cash by using business credit is you can mitigate the rising cost of goods. We've been talking about this a lot, but every day it's more and more true. The cost of things is just getting expensive. Groceries are starting to skyrocket. Gas, they keep telling us the price is going to go down. We haven't seen it yet, but it's one of those things that everything is just more expensive right now. It's just the nature of where we're at and what we're going through. So using your business credit can help you mitigate those rising costs. Revolving credit's going to let you get what you need right now, and then if it let's say you have a 10% increase on your fuel expenses, you can roll that over to the next month, and instead of having to pay the full amount, now you've got a little bit that you can start to roll over. You can start to pay it down. And the reason this is so good, guys, is that while you're doing this, instead of just having all that money coming out of your pocket right then and there, now you've got a little bit of a breathing room. It may be a month, 2 months, 3 months, but now you can look at it and go, do I need to raise my costs? Do I need to add another service? Are there more things that I need to sell? What can I do to actually offset the cost of inflation? What can I do to mitigate the rising cost? And the beauty of it is as entrepreneurs, it's really easy to mitigate the cost of inflation. We go out and we make more money. We go out, we sell more stuff. We go out and we hustle more. We make more. We do more with it. And that's where what you could be doing right now is using that revolving credit to limit your payments. Start setting up a strategy for how am I gonna increase my sales? How am I gonna get more stuff in? What are the products and services that I can add right now that's going to increase my bottom line? And using your credit that way is going to give you that ability to do it. I think I jumped ahead of my notes, but it's going to help you create that time to raise your prices, to increase your revenue, to make sure that you're taken care of. All right. So the number one way that I like to use business credit to protect cash is it gives you the ability to invest in high return activities. Again, you guys are business owners. You are entrepreneurs. You're great at getting out there and making money. And so having your free cash lets you invest in high return activities or investments. So if you know that you can pull a lever, and every time you pull that lever, that it's going to make you money. You having free cash flow makes it that if you get into a tight spot, you can pull that lever a lot more often. A great way of looking at it is if you have $10,000 in credit available and you have $10,000 in cash, combined, you actually have $20,000 of working capital that you can use for your business. And that's how I want you to start thinking about this. How can I invest my credit? How can I use my credit to make an investment? What can I use to be able to take that and leverage it into more money into the company? What can I do to make more sales? What can I do to provide better services that I can charge more from? How can you create space to increase your prices, launch a new product, stock your shelves, whatever it is whatever type of business you're running, investing your cash, investing in the things that are going to give you the highest return is going to help. It's going to help in just about every area. I mean, that's the whole reason you're here, is to make money with the business. So let's start using our credit and our cash flow to do that. And use your business credit to take advantage of amazing deals. Now, this is going to sound a little dark, but it's very true. But anytime you start to see our economy go into a recession, or you start to see it go through economic turmoil, like with what we're seeing now, with everything happening, businesses start to fold. People start to jump ship. People start to shut things down, and there's always opportunities to come in and take other people's databases, to be able to buy out companies, maybe to bring them in. There's a lot of opportunities there, and the more that your business credit and your business finances are in order, it's going to give you that opportunity to be able to take both of those and to invest in strategic ways to be able to make more money with your credit. Now, some of the things that I've seen that I think have been just absolutely brilliant, I've seen business owners come in, open up credit for their competitor under a buyout premise. So they're basically coming in and say, "Hey, we're going to buy you out." They'll go in, they'll build the business credit, they'll start opening credit lines for it, and then they'll leverage that credit to be able to free up the cash flow to be able to buy out the existing owners. There's all sorts of opportunities like that, where when you have the assets in place, you can be more creative. You can have different ideas and start to play around with different opportunities inside of that. So it looks like Channy asked, "Is there a way that we can watch this again?" Yeah, it's going to be on our YouTube channel, our Facebook, anywhere that you're watching it. It's going to be available. Um, all right. So how do we want to accomplish these four areas? So the first thing to keep in mind is I want you to adopt a credit first mentality. And a credit first mentality is just that. Instead of just constantly looking at it going, do I have the cash to pay for it? Think about, do I have the room on my credit to pay for this? How can I use this? How can I use my credit for this? So the first thing that you want to do with the credit first mentality is create a business credit portfolio to cover all of your operating expenses. Now, um, we've within the last year, we've talked a lot about a business credit portfolio, but basically, what a business credit portfolio is I've seen over the years. Uh, we get very pigeonholed about talking about building business credit. The building process is just that. It's just there to build it. It's a process. It's a system. It's something that's got a very definitive ending. Like once you get to the point that you're getting business credit cards, you can finance a vehicle. Your credit is built. But from there, a lot of what happens is we just lose sight of what the power of it is. But once you've built your business credit, you open up hundreds of different vendors. Just about every business that's out there will offer vendor credit, will offer credit lines through your business to be able to leverage them. And so what you want to think of first is, how do I create a portfolio that you're going to be able to put all of your expenses on, so you can mitigate your costs, you can control your cash, you can protect yourself. What what does that portfolio look like, and then start building it from there. Next, you want to protect your cash diligently. Just anytime you can not use your cash reserves, don't. And I'm not saying don't pay off your credit reserves. I mean, obviously, credit needs to be paid back. It has to be paid back. If not, you're just going to end up in the same place that you're at now. But protecting your cash is very simple. Always think, What do I have available on credit first? Because then you know you're going to be paying it off at the end of the month and working with that. And then start building business credit now. It's better to have it and not need it than need it and not have it. Now, I don't ever think that there's an opportunity that you don't need business credit, but if you come to us and come to anybody and you go, hey, I need business credit right now, but you haven't been building it and you haven't taken that time to position yourself and to position the business in a way that you can do anything with it, you're basically just wasting your time. You're going to put yourself behind 3 to 6 months. If you start now, you're going to have that opportunity to start building the business credit, creating that portfolio, creating that space, buying yourself time, protecting your assets, and protecting your income. So, what does it take to make it work? Now, we're not going to go super heavy into the building process. I want to just touch over this for some of you guys who haven't been through it. But you need your accounts to be just under your business name. When it comes to business credit, you should not be personally guaranteeing. You shouldn't need a personal credit check. Your personal credit scores don't matter. Has nothing to do with you personally. It needs to be under your business name, and you do not want these accounts connected to your personal credit. So, how do you get business credit? First off, there's a very specific process to this, and pull this up for you here. I'm going to show you this down here. We've got it. We do have a guide that walks you through this step by step. But I want to kind of cover them for you. So there are specific steps that need to be taken in order to build it, to build a separate business credit profile and business credit business credit score. It starts with how your business is set up or your fundability. It's making sure that your business is separate from you personally. You have a business website, you've got a phone number, you've got a business bank account, you've got your EIN numbers, you're set up with the credit bureaus. All of the steps of what we call our fundability foundations are the first step within that. And then from there, you're going to want to start applying with some of the starter vendor accounts. Now, for those of you guys who have followed us or you've been on this business credit journey, I'm going to share something that I don't think that you're going to find as a surprise. But I think it's really good to make sure to be able to be upfront about. When you're building business credit, there's not a ton of opportunities out there. It's not something where when you're building business credit, you're going to be able to look at it and go, hey, I'm just starting. I've been in this for a month and you're going to have hundreds and hundreds of accounts. You're very limited on what will actually report. I think our actual number is like under 5% of business credit accounts that you would want to use will actually report on your business credit profile. And so the building process, you've got to be kind of selective with it. It's not like this big open field, kind of like there is in personal credit. It takes time. You've got to be intentional with it. But if you've got the right tools, and we've got all these resources on YouTube, on our YouTube channel, on our Facebook pages, everywhere, we've got all sorts of training for this. And again, the guide right down here, the creditsuite.com/EIN. If you go right there, it's going to map it all out for you. But the building business credit side is a process. It's going to take you some time. It's something that you want to be careful with, but it's also keep it in mind that you're building it. So again, start with applying with vendors. You do not will not do a personal or business credit check, and will extend net terms for your business. Let's go back over here. And when you're looking at your vendor accounts, there are typical net accounts with vendors as you're getting started, meaning that it's going to be like a net 30, a net 60, or net 90. Net just simply means that at the end of the term, the net balance is due. So that means that if a net 30 means after 30 days, that entire balance is going to be available, or it's going to be due at that point. And then that net is dependent on the vendors, and part of those factors with that is going to be part of the factors with those terms are going to be what your current business credit looks like, how things if everything's set up, and different factors inside of that. Adrian, hello. It's good to see you again. Glad you can make it. And so, with the business credit building process, so how do you get business credit? You must apply for right accounts at the right time. You're not going to be able to just start building business credit, jump out there and go, hey, congratulations, I now have a $100,000 American Express card with no personal guarantee. It doesn't work that way. There's certain process. There's a certain strategy to be able to maximize it. We break this down into tiers, tier 1 to tier 4. Again, if you go to creditsuite.com/EIN, that's going to show you all the different tiers. It's going to break it all down for you, and show you what you need to do, what steps you can take for that. Without having all the pieces in place first, you're just going to fall flat on your face. And again, we've got a lot of videos. We'll cover it there. But also, if you need help with any of this, we've got the guide that's available at creditsuite.com, because there's a lot of different nuances to building business credit and lending. If you need help, let us know. We're going to help you take the guesswork out of the journey. You can message us, as you see, as I've been talking here. My right hand guy Alfredo's been in chat here answering you guys. Him and I are the ones actually, while you're scrolling through Facebook. If you ever get those pop-up messengers, those are us talking to you. So if you have any questions, feel free to reach out to us on Messenger, or you can schedule a free consultation with us at creditsuite.com/consult. With that consultation, you can get a free business financing assessment, where our team's going to look at what you have available, show you what you can qualify for, and what steps you can take to build your business credit, and what tools are necessary. So outside of that, if you enjoyed today, got a lot of great feedback from you, had a blast hanging out with you. Again, go to creditsuite.com/toolbox. You can get all sorts of great tools for building business credit, and leveraging this, leveraging all these tools, and share this with #BusinessCreditToolbox. Appreciate you guys. If you have any questions, like I said, give us a call, 877-600-2487, info@creditsuite.com, or you can visit us online at creditsuite.com. Thanks. Hope you have a great day.